So this next question here. In recent calls and macro shows, you've talked about distinguishing between quad 3 in Q4 for the US and quad 2 in Q4 for the rest of the world. Have you seen this kind of a dichotomy before? Are you handling this current setup differently? If you have seen it before, and what are some of the similarities?
Yeah, I mean, I've never seen this one before, right? So I think if you guys go to slide 36, just to color that up a little bit, when in terms of what that actually means, what most of you should know, and what I know now is that not all of you do until I keep saying it over and over and over again, which is fine. That's how we coach. Forecheck, backcheck, paycheck, right? So when we go USA versus the mean and the mode of the world, we have a 3 here and a 2 there. That's what's going on. That's why the question is, have you seen this before? Well, I haven't seen this one before, is the number one answer to the question. What is a preferred answer to the question, which I'm not going to give you, is I've seen this happen 3 different times, and I have a sincere amount of conviction. Like, no, if you want to work on the old wall, you say that as an answer because that's what the client wants. The client wants conviction, and they want a pattern that you've seen before. By definition, there is no pattern that is the same as the prior, right? China China is an economy now that is bouncing off the lowest number that they're ever going to print back towards 4%. And every other time that China was hitting quad 2, the GDP growth rate was much higher than 5%. So that alone, I don't need to go down the line and insult people's intelligence on why the world changes, but this is a setup that should be understood within the lens of what the current signals are giving you cues on. Okay? So that's the best way to really do it, Emma, which is to say, like yesterday was actually a quad 4 day. The opposite of quad 2 globally is quad 4. So if you look at what actually happened yesterday, it was China down, commodities down. That is a global quad 4 day within a quad 2 trend. Okay? Whereas in the US, it was a quad 3 day because REITs and utilities led on the upside on a market down day. Okay? So you had both, which is exactly what I've been trying to tell you. And that's the point in having a go anywhere diversified portfolio, is that you can have both and remain completely at ease with that. There should be absolutely no anxiety that there are 2 different colors right here. None. There should be, if there is a feeling, there should be actually, if you can't notice, I'm rather excited for me, because I have so much to do. And there's nothing better than being able to sell a bunch of things that are up that you bought last week, and being able to buy things that were down on a global quad 4 yesterday that are for sale. That's the only real way to compound returns, is to always have something to sell and always have something to buy. Okay? That's good. Now, if you have a portfolio of 33 different things, which I have, that only go up together and go down together, that's a shitty portfolio. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.